My name's Mike Weber. I'm a partner in our tax services group. I feel like a lot of people have commented today about, what's the most difficult spot in the agenda to present. I feel like this is the toughest spot because everyone's out there eating cookies, and I'm up here talking about tax potpourri. And just for everyone's own edification, CPE Day works much like a newspaper. Someone else picks the headlines, I just provide the substance. So if you're not happy with the topic, you're gonna have to speak to somebody other than me. And if you're wondering what potpourri is, yeah, it's next to the cookies out there. And if you missed it, I missed it as well. This morning I woke up and I'm getting ready for today, and my daughter says, "Hey Dad, why are you watching YouTube?" I said, "Well, because I haven't tied a tie since March of 2020, and I need to figure out how to do this. So if I'm a little disheveled, that is why." Of course, we only have one speaker here today, and Mary Lou told me before this that I'm actually auditioning for next year's keynote speaker before lunch, so we'll see how it goes. It's nice to be back, obviously, in person. The last time I did one of these bigger presentations, just so everyone knows, Bob, Dawn, and I were in separate conference rooms at our Gateway Center location. We all had different clickers for the slides, different microphones. We couldn't see each other, and I could only see the camera that was looking at me, and I couldn't see them either. So I'm not sure what's going to be more challenging, going down that pathway or being just the speaker for this presentation. So we'll see how it goes. All right, so the topics that I'd like to address today under the potpourri here is the K2 and K3 reporting. This, at least in my opinion, is one of the hottest items moving into 2022. Of course, it was relevant for 2021, but moving into 2022, there's some stricter guidelines and more regulations with respect to when this is going to be required. Of course, you'd have to be living under a rock right now if you have not heard of or seen the employee retention tax credit. We've done, an unbelievable amount of work in that area, and it still continues to be a hot item and will be for another year or so. And I just want to touch base on a couple key items there with respect to some of the issues that we just continue to see and the opportunities that may still, in fact, be out there. Of course, I have a Pennsylvania sales and use tax minor update with respect to a recent Commonwealth court case that had just come down at the beginning of September of 2022. And that case is particularly interesting because while Pennsylvania has decided this particular issue, other states have not decided this issue. And so many practitioners feel that we're headed to a collision course of the U.S. Supreme Court hearing this particular issue that we'll talk about in a few moments. And then we're going to talk about at the very end the federal taxation of virtual currencies, which I think is particularly important and interesting. And I'll mention it when we get to that slide, but as many of you probably know, if you looked at page 1 of the 1040, there is a question on there about whether you've done anything with respect to virtual currency. And there's not a lot of space on page 1, and so if the IRS puts something on there, I think they're interested in what you have to say about it. Okay, with respect to K2 and K3 reporting, of course, like I had mentioned, this is new or was new for the 2021 tax year. And just to get some basic definitions out there so everybody knows what in the world we're talking about here, the K2 piece of the reporting is really just an extension of Schedule K. So if you know what Schedule K is, with respect to a partnership or an S corporation, you know what that looks like. Just think about K2 as basically blowing up one of those lines and putting a big magnifying glass on it. I was talking with Dawn earlier, how many pages are there between the K2 and K3? We think there could be, a substantial amount of pages, potentially upwards of 50, perhaps even more than that. One of the things that is interesting about the instructions to the K2, K3 reporting is that, if you could believe this, the instructions say that All of the information that is already placed on the K2, K3, all of the boxes that are already prescribed there for you, they don't cover all of the international rules. Now, how could that possibly be the case with that many pages? But nevertheless, they say that in the instructions, and they go on to say that if there's something there that we haven't placed a box for it, guess what you should do? You should attach a statement if necessary. Okay, the K3 is really just an extension of the K1. That is the document that you would also be supplying to the partners or the shareholders of a partnership or an S corporation. Okay, I also printed out the IRS frequently asked questions with respect to why we are headed down this pathway with respect to K2, K3. And I just wanted to communicate some of that to you. Here's what some of what the IRS has to say. Why are we doing this? This should reduce the burden on both taxpayers and the IRS by reducing unnecessary inquiries and examinations that may arise due to inconsistent reporting of partnership and S corporation items. Now, if you've ever looked at the K2, K3, I find that extremely hard to believe that this is going to eliminate inconsistent reporting. In fact, it probably is going to do the opposite of that. They also go on to say that having clear and consistent forms and instructions will ultimately help partnerships and S corporations report their income in an efficient manner. We'll see about that. Then also, if you get an invoice from us in the future with respect to this, the IRS does say, while partnerships and S corporations will initially have transition costs, ultimately, they will benefit from increased transparency of information and reduced uncertainty about what to report and how to report it. Now, if you've ever looked at the instructions, I think you'll probably conclude that that may not actually be the case. Okay, the intention of the K2, K3 reporting is really to provide information to partners and shareholders so that they can correctly compute on their individual tax return some of the foreign items, including the foreign tax credit that in the past the IRS feels like they were not armed with that information with respect to what they were receiving on their K1. If you know anything about the K1 on box 16 or line 16 on the Schedule K, box 16 of the K1, that was really where most of, if not all of the foreign transactions and reporting were reported. Now, that box was a little bit small, and if you needed to report anything further, you had to attach a statement, and there was no rhyme or reason as to how you were going to do any of this. It was really up to the practitioner to decide that. So we've eliminated that and decided to provide additional boxes and ways to communicate information to not only the IRS but the individual owners that of course have to report this information on their Form 1040. The other reason that they say they went down this pathway is because the TCJA changed much of the U.S. international taxation system. That particular act included various other items that we haven't seen in the past. Obviously, I've got them listed up here. You've got the GILTI, Global Intangible Low Taxed Income, which really is just deemed income if you're the owner of a controlled foreign corporation. You have the base erosion and anti-abuse tax, which is a tax on shifting profits from the U.S. to a foreign corporation by making certain types of payments. There's also the foreign-derived intangible income benefit, which allows a taxpayer to basically take a free deduction for the sale of products related to intellectual property when that intellectual property is held here in the United States, but they're selling products associated with that to foreign customers. Apparently, something on the K2, K3 must permit you or allow you to dive deeper into these rules in order to get the appropriate ultimate tax answer at the end of the day on your 1040. Okay, who has to file the K2, K3? Well, in 2021, there were, certain exceptions with respect to if you just had domestic activity and if you tried to make a good faith effort with respect to, filing the forms, and if you couldn't figure it out or it was too complicated, there was this good faith clause or exception that was out there that would allow a practitioner to escape any of the penalties associated with the non-filing of that. The IRS does have a frequently asked question about this. And if you want to look at the IRS website with regard to K2, K3, it is number 10. And that, if you find that you have this situation in the future, if you have a notice that comes to you with respect to this, you're going to want to take a look at those rules and see if you could qualify for relief. All right, 2022, who has to file the K2, K3? Well, basically everybody, and there is one exception. And the draft of the instructions for 2022 was just released on October 25th. In fact, if some of you could see, the watermark is still on this page. There is what they're referring to as the domestic filing exception. And there are 4 prongs to this exception. So if you're going to qualify under this domestic filing exception, you have to have met all of these prongs. Here's what they are. You have no or limited foreign activity. All of your partners or shareholders are U.S. citizens or resident aliens. You've met the partner notification rules, and no partner has requested that you supply them with a K3. Now, what are the partner notification rules? If you could believe this, this is what the IRS, in order to qualify under this exception, is asking practitioners to do. Since the due date of the partnership tax return is March 15th, they're asking you by January 15th to send a letter to every partner, shareholder, and all the partnerships and S corporations that you service and ask them, do they want a K3 for this year? So our administrative staff could be very busy this year mailing out, hundreds of these form letters to all of our partners and shareholders in the businesses that we service. Now, what happens if nobody replies and they reply and say, we don't want it? Well, then guess what? You've qualified under this domestic filing exception, and you don't have to fill out the K2 or the K3 and provide that to any of the partners. Well, what happens if somebody writes back? And I could see some people laughing here thinking, oh, I have a individual client, and if I get that letter from GYF, I'm going to ask them to provide the K2, K3. And if that's you, God bless you. What happens if that information is returned back to us and we have to supply that? Well, if we get that notification prior to 1 month before the due date of the tax return, we have to supply the K2 to the IRS and the K3 for the partner or shareholder that is requesting this information to the IRS, and we have to supply the K3 to that partner or shareholder that's requesting it. What happens if we get a request after that February 15th due date? Well, then the only thing that the practitioner is required to do under this particular exception is to just provide the K3 to that partner or that shareholder. You don't have to do anything else. I'm sure the IRS will probably have more to say on this. In fact, on December 26th, one day after they released these draft instructions, there's a piece of their website that allows anybody to go in there and ask questions, leave comments, or ask the IRS to expound upon certain things. They're going to take all of that information and perhaps provide more information at some point in the future. So we'll see where this goes, but nevertheless, the domestic filing exception is one of the exceptions that is sitting there per the instructions that were released on October 25th. Okay, just to give you a flavor of what shows up on the K2 and the K3, check out some of these items. Now you might be saying, well, I just invest in like a rental property and that's all I get is just like this little K1 that has one number on it. Yeah, that very well may be the case. And depending on, I guess, the exact circumstances of what's going on in that particular organization that you're a partner or shareholder of, and you request this information, you might be getting this substantial document, and all of these line items may not actually be relevant to you, but nevertheless, the practitioner has got to go through and figure out, okay, what numbers do we have to report, if any, and where do they go? And look at some of these parts here. I'm not going to go through them in great detail, but if you pulled up the K2 and the K3, you would see all these headings there, and boy, trying to figure out how to compute some of this stuff is, unnecessarily complex, at least in my opinion. So I've got them all listed here. They're obviously in everybody's slide deck. They go through, parts 1 through 11, and the K3 does the same thing. Of course, like I said, the K3 is just reporting, that individual partners or shareholders information with respect to the items that are supplied on the K2. Now, why would you need this information? Well, for most people, I'm guessing, because of the foreign tax credit that you might be able to take or the foreign tax credit limitation that may be out there, you need to know what all of your sources of income are and report that on the 1116 form. That's a common form. We see it a lot of the time, especially with respect to when we have individuals that have 1099s and their stock portfolio may be investing in certain foreign operations generating foreign tax and such. We're going to may be required to disclose some of that on the 1116 form. And if we don't know, apparently, all of the information from all of the other K1s that we might be receiving, perhaps we're not filling out that form correctly. So nevertheless, I think these first two forms, the 1116 and the 1118, with respect to corporations, that's really where I think the most amount of information is going to be gleaned from those K3s in order to report your foreign tax credit correctly. The 1042 form with respect to annual tax withholdings, if anybody's ever seen that form, there could be information on your K3 with respect to how you fill that out. And if you're selling assets that are on the 4797, you're selling assets that are foreign in nature, you may have to disclose some of that on the 4797. All right, that's all I have on the K2, K3. But just to recap, I think the most important item here, obviously, is that domestic filing exception. That is something that I think every practitioner really needs to take a long look at, because if you're going to rely on that, right, you have this partnership that you really don't think has any type of foreign activity, and basically if you supply the K2 and the K3, it's pretty much all going to be zeros, or everything's just going to be reported as U.S. activity. Why do we need to go through this big process of providing all this information? There's a way out of it, but make sure that you're not running afoul of the rules and you've notified all of the partners and shareholders that you're required to notify. Okay, moving on here. Like I said, you'd have to be really living under a rock right now to not know that the employee retention credit is out there, and many businesses have taken advantage of this. Some, if not most, of the businesses out there that have applied for the money or filed the appropriate forms eons ago, if they were on top of it and knew what they were doing, they have that money in their pocket right now. But the statute of limitations with respect to filing this or applying for this credit is still open. Now, we're seeing obviously a tremendous leadway or tremendous runway of time in order to get your money back. I mean, right now, I think the general rule of thumb would be like 6 to 9 months. I think it's perhaps even longer than that at this point. And most of it does relate to the fact that obviously the IRS doesn't have the appropriate number of people to be able to go in, look at the tax returns where this credit is being filed. And at this point, in order to get that credit, as most of you probably know, you have to amend your 941 in order to do that. The only way to amend a 941 is, of course, to mail it into the IRS. Who knows where it goes or who opens it or when they'll open it in order to look at it. The basic qualifications are still there, right? Was your business shut down by the government in some way, or did you meet the requisite decline in gross receipts test? Right now, not really seeing too much in the way of inquiries with respect to the decline in the gross receipts. That's really more obviously algebraic. Anybody can look at that and see if they've met the test there. Where we're seeing much of the inquiries right now is really in that gray zone. Was my business really affected or impacted by a governmental order in a more than nominal nature? Right now, obviously, I think a lot of people probably here have received emails from boutique consulting firms that claim to be experts in the employee retention tax credit. And what they're telling you is basically every business qualifies for this. Now, the IRS, per previous presentations today, is out there looking to hire a number of people. Well, what are they going to do with those people? A lot of practitioners think that there's been a lot of fraud with respect to businesses that are saying they qualify for this credit that don't actually qualify. And we think that, in the next couple of months, for sure, we're going to start to see more examinations, or at least the initial examinations with respect to this credit. So if you're getting inquiries from these boutique firms and you're not sure whether you qualify, you better take a step back and look at that situation, because I assure you that, especially if you have a high dollar figure there, someone's going to eventually take a very close look at that. The IRS also released some information about some of the other issues that they're seeing with respect to businesses trying to claim this credit, and that is that some people don't realize that when you claim this credit, you have to record that as income on the tax return where the credit was generated. Doesn't matter if you're in a cash or an accrual basis taxpayer. If you've claimed that credit for 2020 or through 2021, theoretically what you're supposed to do is go back and amend those tax returns, reduce your wage expense for that refund amount that you're receiving, and of course think about the trickle-down effect of that. Taxable income goes up, who has to report it, pay the tax, et cetera, et cetera. I think we've done a good job of making sure that everybody's been notified of that. However, one of the sticky areas with respect to this is what happens in the event that a business was bought or sold during the 2020 or 2021 or even after 2022 timeframe. I have a situation right now where a 2022 business has come to us and said, hey, we think we qualify for this credit. And they do. They absolutely do qualify for this credit. But the people that are the owners now were not the owners in 2021. And so, you got to call up the sales agreement. You got to call up, your legal team, figure out, who's entitled to that credit. Has that been bargained away in some way with respect to the transaction or the closing with respect to the sale of that business? So that's an issue that I have seen pop up. Obviously, I mentioned the processing concerns right now. Again, general rule, 6 to 9 months. I think it could be longer. The other issue is that, you get a lot of inquiries asking us to inquire of the IRS with respect to where does the return stand. Well, I think Dawn had mentioned like 11% of the phone calls that you send into the IRS actually get answered by somebody. I got to be honest, I think it's like a lot lower than that. I mean, I've tried to call so many different times, and you really just can't get through. Basically, they say, we're too busy, call back later. And then you call back and they say, we're too busy, call back later. And then you just keep going through this cycle. One of the reasons why that's a problem is because the IRS claims that there are robocallers, right, that are calling into the IRS. And they have this computer system that's just firing off, hundreds of thousands of calls every day, and there's really nobody on the other end. Or if there's somebody on the other end, they're just waiting until the IRS picks up, and then they'll pick up. So the IRS put in very recently, it caught me by surprise actually, a question now that sometimes they ask you whenever you call into the practitioner priority hotline. And when I called in, the first question that I got, with someone else here in our audience as my witness, they asked me, what is 7 plus 5? That's what they asked me. They asked me, what is 7 plus 5? Now, you could verbally say what the answer is, or you could key it in. Luckily, I was able to get that right. And when I got through to an IRS agent, I asked them the same question. They didn't get it right, surprisingly. And I was telling somebody else that I was having lunch with, I called in another time, they asked me, what color is the ocean? And I said blue, and they denied me, if you could believe this. So if you're calling into the IRS, it's very possible, not on every occasion are you going to get these questions, but most times you're going to get this question to eliminate some of those robocallers that are calling in. Perhaps we can get to the bottom of some of these, retention credit inquiries much quicker because this question is now or these questions are now being posed to practitioners that are of course calling in. I was reading an article not too long ago about if the IRS examines you with respect to this retention credit, what are the kinds of things that they're going to be looking at, absent the whole idea about whether you've been shut down by the government? Because I think obviously everybody sees that as a gray area. But what if you just clearly have a decline in gross receipts and you otherwise, would qualify? What is something that they're going to be looking at? Now, this particular article that I was reading actually suggested an item that I think, could be an examination item, but I really see it as an item that really could potentially open the door of opportunity for businesses that don't think that they qualify. And that is with respect to how many employees did you have in 2019. If you're applying for the credit in 20 or 21, there's a limitation on how many employees you could have had employed in 2019. And that limit for 20 is 100 people, and that limit for 2021 is 500 people. But what some people don't know is that the way that you count people with respect to this is that each person counts as 0 or 1. And that's because they're looking at the Affordable Care Act rules with respect to how many hours in a week you're working or how many hours in a month you're working. So there are no fractional people. So you could have a ton of part-time people and have theoretically 1,500 people on payroll on 2019, but for purposes of this counting and this testing, it could be lower than the thresholds here. So this particular article suggests that this could be an examination item that they're definitely going to want to look at. And I guess, there's certain attributes. Obviously, you have to check the box for all these different things. Clearly, you have to be under this employee count. If you run afoul of those rules, obviously that's going to be an issue. But I kind of see it the other way. I've seen situations where businesses didn't think they qualified because when they added up their employees, they came up with 700, and when you go back and take a look at it, they're really at 280 because they weren't using the correct set of rules. Okay, as I had mentioned here, on October 19th, the IRS did release a ton of information with respect to the scam artists, as I'll call them, that are out there trying to entice businesses to file for this credit. One of the things that they mentioned there is that most of these boutique firms, if not all of them, are asking for a payment up front of the amount of money that they're supposedly getting back for you. Of course, you don't have the money in your pocket at this moment. You have to come out of pocket to pay that. And what's going to happen on the back end is anybody's guess. They say that the improper and aggressive positions all relate to the shutdown. I guess that's true. The IRS also says that those aggressive positions also relate to the employee count, which I just alluded to before with respect to the article I read. They also say that these boutique firms are not notifying businesses of course, the idea that you have to include this as income in the year that the credit's derived. Basically, they're a fly-by-night operation. They want to calculate this big number for you, charge you a whole lot of money. It feels like a great story, but you don't understand the ramifications associated with this. So as a result of all that, the IRS said, hey, there's a way to report retention credit fraudsters. You have to fill out the form 3949-A and send that into the IRS. So if you see that happening and you're concerned about someone's application or some of the things you see there, you can fill out that form and send it in. And when I became aware of this, between Dawn and I, we've already mailed in 150 of them. So we'll see where that goes. Okay, moving on. Changing gears here. PA sales tax. I feel like I talk about this every year, but nevertheless, it's a very important item. As many of you may know, the Pennsylvania government releases every month the amount of revenue that they receive from all of the different taxes that are out there. And in October of 2022, they reported that they had received $1.3 billion in sales tax revenue. And that was 2.9% more than anticipated. The governor also went on to say that Quote, our state government is frankly swimming in cash right now, and we need to reinvest it in things that will make Pennsylvanians' lives better. Now, I'm not disputing any of that. I'm just merely saying that, boy, it sure seems like the Department of Revenue, the Commonwealth, they have more money than they were anticipating. You know, what are the types of things they're going to do? But $1.3 billion every month, and I don't know if that's the number every month. It probably fluctuates a little bit here and there, but nevertheless, that's a lot of money. There's a lot of money running through the system. Well, why is that? Well, Pennsylvania, much like every other state, they're trying to latch on to every single kind of business or operation that's here, so that when you sell something to somebody that's here in Pennsylvania, that you charge them sales tax, like in every instance, so that you have it in your pocket. And when it comes time to file the tax return, the sales tax return, you just shift that straight over, to the Commonwealth, and they get their money. Of course, the reason for that is because most people do not report use tax. It is a line item on your PA 40. Most of the returns I look at oftentimes have a zero there. I'm not sure if that's because it's actually zero, or someone just hasn't supplied the information, or what the case may be. But obviously, these states are out there looking to try to subject businesses to withholding or charging and withholding sales tax at the point of sale. Now, I bring all that up, and as many of you probably know, there used to be this physical presence requirement that had come down from a Supreme Court case back in 1992, where in order for a state to be able to compel an out-of-state corporation to register, charge, collect, and remit sales tax, they had to have had a physical presence in that state. And as time went on, mainly related to Amazon and places like that, a lot of sales and of course, and revenue, of course, were happening online, and the brick and mortar stores were no longer, and you could buy something from a company in Arizona and they just ship it to Pennsylvania. I mean, clearly that was what happened. That was what was happening. South Dakota got very upset about this, and they wrote the rules with respect to the economic nexus rules as they are today under the Wayfair case from 2018. I'm sure everybody's fairly familiar with that. But this case here talks about a slightly different issue that, at least in my opinion, and if you read out there the opinion of many people, is a decision that is likely to be headed towards the U.S. Supreme Court, because we're going to see states with a differing opinion with respect to what's happening here. In this particular case, you had kind of like a mom and pop type taxpayer that was using fulfillment by Amazon to sell their product. So what they did is they gave Amazon their product, and Amazon takes it and they put it in their warehouses that are situated all around the United States. Here in Pennsylvania, according to this case, there are 10 fulfillment by Amazon locations where products can be stored. And Pennsylvania's position has been that, absent anything else, the fact that you have inventory stored in this state through the fulfillment by Amazon, that is going to give you sufficient nexus where if something is sold to a Pennsylvania customer, you would have to, Amazon in this case would be required to charge sales tax. Now, this online merchants guild said, wait a minute, that just doesn't make sense. All we're doing is storing our product here. How do we know where it's going? We're not really availing ourselves of any of the attributes that would be here in Pennsylvania. We're not using the court system for anything. We're not doing any of that type of stuff. Why should we be subjected to these rules and provisions? And so they challenged a business activities questionnaire that was sent to them by the Department of Revenue and said, we're not supplying you with this information with respect to what our activity is. And furthermore, we don't think we're subject to the nexus rules with respect to sales tax. And further beyond that, we don't have nexus for income tax purposes either, even though we're storing our product here in Pennsylvania. So what did the Commonwealth Court say here? They said basically that, yeah, we agree with the taxpayers. You don't have nexus here for sales tax. You don't have nexus here for income tax. And guess what? A lot of other states perked up and are looking at this thinking, okay, now if this same type of issue gets challenged in our states, what is our court system going to do? And I think that remains to be seen what's going to happen there. But I do think that this is obviously very persuasive. It's a situation where, practitioners are going to be out there saying, look what Pennsylvania did. Why shouldn't we do the same thing? And I think that's probably where we're headed. Now, yeah, there's a lot of legal mumbo jumbo in there about, this is a state issue, but could it be a federal issue? Why is it that? And they get into the court system there. And, ultimately, how does it make its way up to the Supreme Court? There's like roughly 7,000 cases that are sent to the Supreme Court every year. They hear roughly between 100 and 150 cases. So back when Wayfair was, when the Supreme Court notified everybody that they were going to hear that case, everyone's ears perked up, obviously, because they just don't hear that many tax cases. So when the Supreme Court takes a case like this, you think there's going to be something monumental. Of course, there was in that case. This one potentially could be the same thing. Now, you have to look at this, though, and say, well, yeah, I'm circumventing the nexus rules by virtue just of having inventory there, but what if I still have the requisite number of sales revenue or sales transactions in that state in the look-back period? Well, yeah, you're not going to escape those rules because you're subject to nexus under a different provision, the economic nexus rules that, of course, were given to us by Wayfair. So, is it really a big deal for big taxpayers? Maybe not, but is it a big deal for smaller taxpayers? Absolutely. And so we'll see, and we'll be tracking this to see where this goes. We also need to take a look and see if the Department of Revenue wants to appeal this case to the Pennsylvania Supreme Court. Most people think that they will not do that, and this will stand as is, but we'll have to see where they go with that. I don't know. I get excited about these types of things because, the stuff we do, obviously, day to day, if you drew up all the taxes on a chalkboard, you could come up with, hundreds of them, right? And a lot of times people think that, okay, we deal with income tax. We do deal with that. But we get a lot of questions, a lot of inquiries with respect to, am I abiding by the sales tax rules? Where should I be looking? Should I be subject to doing anything? Do I need to register somewhere? We get that all the time. We're happy to help our clients through those matters, but in order to be able to do that, you got to really be on top of what the current rule system is. This is just another piece of information, obviously, in our toolbox that we're going to be using to assess whether or not someone has nexus here in Pennsylvania for sales or income tax purposes. Okay, the last topic that I have is the taxation of virtual currency. The IRS has defined virtual currency as a digital representation of value that functions as a medium of exchange, a unit of account, and or a store of value. Of course, everybody's probably heard of Bitcoin. I think when I was putting this slideshow together, at that point in time, it was roughly worth $20,000 per coin. I'm not sure what it is today. But today we have over 1,600 cryptocurrencies, which are a form of virtual currency. Okay, as I had mentioned, a sheet of paper, right, is 8.5 by 11 inches. That's what it is. Page 1 of the Form 1040, that's how big it is, right? It's roughly this big. How much information could the IRS jam onto a page that's this big that they feel is important? And if they're going to take up space on page 1, they must think that the issue is of particular importance. And roughly about 1/3 of the way down the page, the IRS does ask this question. At any time during, and in this, what I'm looking at, 2021, did you receive, sell, exchange, or otherwise dispose of any financial interest in any virtual currency? Now, excluding all the provisions that are out there with respect to reporting and how you tax that and what information you're supposed to put on in Schedule D, we're going to talk about a few of those items here. If you check yes to that, I wonder, what is the IRS doing with that information? Forgetting what else you put on your return. Maybe you report everything correctly, but you've checked yes. But what happens if you check no? And, in fact, you did do one of these things. You did receive, you did sell, you did exchange, or otherwise dispose of financial interest in any virtual currency. Again, piece of paper is not that big. Page 1 of the tax return seems to me to be a super important item. If they're asking that question now, they're looking for something down the line. And it remains to be seen exactly what they're looking for. Of course, I think we all know that they're trying to identify taxpayers that are not being honest with respect to the virtual currency transactions that they're participating in within a given year. Most people, I shouldn't say most, some people like the virtual currency because of its anonymity. You can't really trace it or track it, so that's why they operate. And oddly enough, I think it's an agenda item at our next partner meeting. We're going to be accepting Bitcoin now as a form of payment on our invoice. I'm just kidding. But there have been NFL players and NBA players that have accepted their signing bonus in virtual currency. Can you believe this? So, I think it was Trevor Lawrence from the Jaguars that accepted a signing bonus in virtual currency. So he's getting like a, $3 million signing bonus. They give it to him all in Bitcoin. And what happens if by the time he gets it, he can't convert it to US dollars? Maybe he wants to hold it immediately, but he gets a $3 million value in Bitcoin, and by the time he converts it to the US dollar, it's worth $2 million. Well, those are the types of things that could happen in this environment. Of course, it could go up as well. Receipt of virtual currency as a payment for goods or services is considered gross income at the fair market value. And the IRS has said fair market value is the US dollar value at the time you receive that. And if you don't think that some businesses are accepting virtual currency as a form of payment, then I think you need to look a little bit harder. There, Overstock.com, I think many people have probably bought stuff on there. They accept virtual currency as a form of payment. What's going to happen when Amazon does that? I think it's coming. And so businesses that are accepting that type of currency as payment, you really got to look and make sure you know what you're doing there. Okay, this is probably the most common question that I get with respect to selling or exchanging virtual currency. When do I have to report this on my Schedule D? Here's what the IRS says. Gains from transactions of virtual currency are taxable at the time the virtual currency is exchanged for the US dollar, property, or services. That's when you have to recognize it and report it as a gain and, of course, taxable income. Some other questions that have come up, not as common. Do the 1031 exchange rules apply to transactions involving virtual currency? They do not. And do the wash sale rules apply to transactions involving virtual currency? They don't either. And just as important, although not as common, are questions that have arisen with respect to if you own virtual currency, do you have to abide by any of the foreign reporting items? With respect to the FBAR, the IRS and the Treasury has said that virtual currency balances are not reportable on the FBAR. But many practitioners think that under the FATCA rules, there's a special form you have to file, the 8938, that if you have an investment in virtual currency that you should be reporting that information on that form, provided that you meet the other qualifications for having to actually file that form. So it's just something to keep in mind. No FBAR, but take a look at the FATCA rules. If you're somebody that's mining Bitcoin, and if you don't think those people are out there, I assure you they're out there, and in some cases they're major operations. Mining Bitcoin is considered to be self-employment income. It's a trader business. But of course, since it's a trader business, you can take the appropriate expenses and deductions against that level of income. This one kind of blows my mind a little bit here. Other than the Trevor Lawrence situation and things like that, or your professional athletes accepting like a one-time payment, what if we just decided to pay our staff associates, hey, instead of cash, we're just gonna give you virtual currency every twice a month. So when you get that, you can do what you want with it. Well, even if we do it that way, we still have to supply that person with a 1099, and if it's compensation, we still have to supply them with a W-2. And how does that exactly work with respect to the payroll taxes and the other withholdings that might be there when you're paying somebody in virtual currency. Like I said, if you don't think that's out there, I assure you that it is. Okay, so just to, let me go back one slide there. Okay, just to recap here. We talked about the K2, K3. We talked about the retention credit. We talked about the sales tax. We talked about the virtual currency. That's the potpourri for the day. I did check the IRS website with respect to a couple additional items, and one I had already mentioned that right now you can submit questions and comments with respect to the K2, K3 instructions, and we'll see what the IRS has to say about that. That is live and active on the IRS website. I did just look at that earlier today. Some of the other things that the IRS posted that I thought were relevant that, again, we'll see where this goes. They're anticipating hiring 4,000 customer representatives for the 2023 filing season, with an anticipated 1,000 representatives being hired by the end of this year. So we'll see where that goes. And then, of course, they said, hey, don't forget to renew your P10. So everybody in here that has a P10, don't forget to renew that. That is coming up. Okay, thank you for your time. That's all I have.